Good afternoon, and thanks for joining us for a Tax Practitioner Board webinar. My name is Ashley Dowsard, and I'm joining you from Ngunnawal and Ngambri country. I respectfully acknowledge the traditional owners and custodians of country throughout Australia and their continuing connection to land, waters, and community. I'd like to pay my respect to them and their cultures and elders past and present. To begin, I have a few quick housekeeping messages. First, to obtain a copy of today's slide, you can visit our Webinars Resources Hub at tpb.gov.au/webinars-hub. We'll also email you a copy of the slides. Today's webinar counts towards your continuing professional education or CPE, and you can claim 1 hour for attending. In relation to claiming your CPE, we will issue an attendance certificate to those staying online for the duration of the webinar. Today, we'll look at the new Code of Professional Conduct obligation with a focus on one of the 8 new obligations. We'll discuss the reasons why there are new obligations, new code obligations, the government's transitional arrangements, our consultation process, the new requirements relating to false or misleading statements, and then we'll finish off with a panel discussion to answer your questions. We also have Fiona and Nadia from our policy and legislation team here to respond to your questions as we go. So please submit them using the Q&A. To find the Q&A, simply hover your mouse over the screen and a range of icons will appear on the bottom of your screen. You can also use the chat function to speak with other participants. We won't be monitoring the chat closely throughout the presentation, so if you want a response from us, be sure to use the Q&A. To disable any of these functions, simply hover over the relevant icon and unselect Show Preview. We have a lot of people online today, so we may not get to all your questions. However, we will have FAQs available on our website following the webinar. Also, a reminder to keep your comments courteous and professional. Now, I'd like to introduce our speaker and panelists for today, Peter DeCure, TPB Chair, Michael O'Neill, our CEO Secretary, and Jeanette Liu, TPB Assistant Secretary. Welcome, Peter. Over to you to start us off.
Thank you, Ashley, and thank you everybody for joining us for this afternoon's update. I'd like to begin by saying that I'm sure you're all going to have a lot of questions, and I want to acknowledge that there are some quite legitimate concerns in the tax community about the changes to the Code of Professional Conduct. I'll refer simply to the code. I understand the concerns, and today's session is one of the first of a series where we're hoping to work closely with you, firstly to help explain the changes to the code, and secondly to encourage you to be involved in our public consultation process in relation to the guidance that we've issued. So let's jump straight into slide 5, please. As I'm sure you're all aware, the legislative instrument requirements contained in the code are built upon the existing principles that are in the code already. Their aim is to strengthen the integrity and accountability of the tax profession. And I think in reality, you know that the vast majority of agents are already either fully compliant or doing their very best to comply. These new obligations, I think, will help you with a little bit of additional specificity, and also we will be helping you with practical and pragmatic guidance in relation to the implementation of these new requirements. So I'd like to just move straight into it and give you a little bit of extra background about the new obligations, their purpose, and what they aim to achieve. Starting back in 2019, there was the James Review, which was an independent review of the operations and system for the TPB. The review recommended that there be a power to create a legislative instrument. This recommendation was adopted by government, and basically it gives the minister the power to supplement the code to address emerging or existing behaviours that he's seeing in practice. This resulted in the government amending the TASA legislation on 1 January 2024, introducing additional code obligations which state that practitioners must comply with any obligations as determined under section 3012 of the code, which is a new section. As I've said, this allows the minister to create new obligations, the purpose of which is to allow the minister to amend the legislation by expanding the code. If the minister chooses to use this power, any additional obligations relate to the professional and ethical conduct of registered tax practitioners and are generally consistent with other parts of the code. As I'm sure you're all aware, the minister has now issued a determination using this power to introduce 8 additional obligations to supplement the existing obligations under the code that will help to reinforce the high professional and ethical standards expected from tax practitioners by the community. Next slide, if I may. Thank you. The new code obligations include, firstly, upholding and promoting the ethical standards of the profession. They talk about false and misleading statements made either to the TPB or to the ATO. They deal with conflicts of interest in activities undertaken for the government. They talk about maintaining confidentiality in all dealings with government. They expand on your current understanding of keeping of proper client records. There's a new requirement to ensure that any tax agent services that are provided on your behalf are provided competently. There's a requirement for all tax practices to have a quality management system. And there is more specific requirements in relation to keeping your own clients informed of matters that are relevant to them. Importantly, these new obligations align very closely with the existing 5 principles of the code. They also very much leverage material from other existing professional bodies such as the Accounting Professional and Ethics Standards Board, which have developed and released substantial guidance material. Other elements of the code will build on well-known concepts understood in tax and corporate law and concepts that tax practitioners are often regularly advising. In making changes to the code, there is a transitional arrangement. Following consultation with the professional associations and other stakeholders, and further consultation with practitioners, on the 8th of October 2024, the government amended the original determination to clarify the intent and scope of the new obligations and to refine how tax practitioners address integrity and transparency. In addition, there was a new application date. So the new code obligations apply from 1 July 2025 for tax practitioners with 100 or less employees, as at 31 July 2024. This includes new practitioners with 100 or less employees that register between 1 August 24 and 30 June 2025. The provisions of the new code determination apply from 1 January 2025 for all other tax practitioners, that is, the larger firms with 100 or more employees. The delayed application date provides time for everybody to develop and implement and update their own systems and processes necessary to meet these new obligations. As I've said, to support the implementation, the TPB has been heavily engaged with all stakeholders, including tax practitioners, professional associations and community representatives, to develop practical guidance and ensure that we capture any significant issues. We're now at the stage where we want to engage in a public fashion with all of you and anybody who would like to make any feedback. So the opportunity there is now to provide us with feedback in relation to our draft information sheets, and this is intended to be your opportunity to talk about what guidance we are providing to you for the implementation and operation of these new provisions. Regrettably, the time for any complaints about the new provisions has passed. What we're working on now is their implementation, and what we're seeking is your feedback in relation to the draft guidance that we've issued. Our public consultation process is open until the 21st of November and is open to submissions from you and the public at large. If you would like to make a submission, you can do that by emailing tpbsubmissions@tpb.gov.au. Once we've received all the feedback, we will consider that feedback and work it through with our team and implement as much of it as is possible within the final guidance. In the course of the consultation period, we will continue running a series of webinars to work through the individual items of new law and new code requirements to try and help with the understanding of those requirements and to give you an opportunity, one, to get ready for their implementation, and two, to consider the guidance that is out there for your consultation. From the TPB's perspective, we're very much aware that these new reforms will take a little bit of implementing, and we're very aware and intending to have a practical and pragmatic approach to their implementation. As I've said, our immediate focus is on the guidance through consultation with you and to provide education to practitioners so that you understand what's required of you and you're ready to implement on or before the application dates. This includes providing a reasonable time for you to understand your obligations, to assess your practices and implement changes if required. So all of that said, we'll take any questions about the consultation at the end. I'd like to just move on and talk about today's specific topic, which is the new section 15, which is about false or misleading statements. Under the new section 15 of the determination, there's expanded obligations on practitioners in relation to false or misleading statements. At a high level, the new requirements have two key aspects. First of all, a tax practitioner must not make a statement to the TPB or the Commissioner or another government agency that they know or ought reasonably to know is false or misleading in any of its particulars, or omits any matter that without which the statement would be misleading in a material respect. Practitioners have the same obligations in relation to statements that they prepare or statements that they permit or direct someone else to prepare to the TPB or to the ATO. So for clarity, the statement must not be false or misleading in a material particular, or it must not, by omission of something, be misleading in a material aspect. And this applies to your work either as a registered tax agent or as a registered BAS agent or in any other capacity. So I want to be really clear that it relates to your own personal tax obligations as much as it does to your client obligations, and it relates to all of your interactions with the TPB and or the Commissioner. This requirement really is based on the existing code provisions around integrity and honesty and truthfulness. It's completely consistent with the existing obligations under the code and is about how we conduct ourselves in our day-to-day practice. It is concerned with particulars that are material in nature. So this means that false or misleading matters that are trivial or minor in the circumstances would not constitute a breach of the code obligation. Secondly, practitioners will be required to take certain further action where they have made a statement or permitted or directed someone else to make a statement that has been given to the board or the Commissioner in relation to themselves or their clients, and all of the following apply. At the time the statement was made, the practitioner had reasonable grounds to believe that the statement was either false or misleading in a material particular at the time the statement was made, or omitted a matter or thing at the time it was made, and that made the statement misleading in a material particular. The Commissioner has reasonable grounds to believe that the practitioner has reasonable grounds to believe that the false and misleading nature of the statement resulted from either a failure to take reasonable care in connection with the preparation or making of that statement, or recklessness as to the operation of the tax law, or intentional disregard of the taxation laws. Let's move on. So, if the above circumstances have occurred, then there are specific requirements for the practitioner to take further action after the time that the tax practitioner comes to believe that the statement was materially false or misleading. These actions will vary depending on the particular circumstances. So, where a false or misleading statement has been made by the practitioner for an entity that is not their client, for example, a tax practitioner themselves, the registered practitioner must, as soon as possible, have that statement corrected. If the practitioner has made or prepared a statement, or permitted or directed someone else to make a statement for a client, the practitioner needs to advise the client that the statement should be corrected, and they need to advise the client of the possible consequences of not doing so. At this stage, the client may well instruct the tax practitioner to take steps to correct the statement on the client's behalf. We would expect that practitioners and clients are well able to negotiate any commercial matters around fees or other things that are relevant to the practitioner correcting that statement. Just moving on to the next slide. Where the statement was made for a client and the client was advised about correcting the statement, if the registered practitioner is not reasonably satisfied that the client has corrected the statement or otherwise explained the statement, the practitioner will be required to withdraw from the engagement and any professional relationship with that client. As well as withdrawing from the engagement, if the practitioner has reasonable grounds to believe that the false or misleading statement was made as a result of recklessness or intentional disregard of a taxation law, either by the client or the tax practitioner or someone else involved in preparing the statement, and the registered practitioner has reasonable grounds to believe that the client's actions may have caused or will cause substantial harm to others, including employees, taxpayers generally, the public, or the tax system, then the registered tax practitioner will be required to notify the TPB or the ATO, depending on who the false or misleading statement was made to. It's very important to note that the requirement to notify the ATO or the TPB only requires the practitioner to notify the ATO or the TPB that the practitioner believes that the false or misleading statement has been made by the client. The practitioner does not need to provide further evidence or take steps to correct the statement themselves. Lastly, there may be other action that the registered practitioner reasonably considers in the public interest to take in relation to that particular false or misleading statement. Again, this will depend on the circumstances and could include providing additional information or intelligence to the ATO, to the TPB as appropriate, or potentially providing information to another practitioner in relation to the matter, especially in response to an ethical clearance letter. There are some exceptions to the above requirements to take further action, which are explained in detail in our draft information sheet. For today's purposes, I won't go through the exceptions, but I do invite you to have a look at the draft information statement, and of course, please provide any feedback that you might have in relation to that. For now, I'll hand you back to Julie and we'll start on our panel conversation. Thanks, Julie.
Thanks, Peter. Thanks for setting the scene for today. So I'll just invite Jeanette and Michael to join us as well for our questions and panel. So Peter, I might ask the first question of you, and that is, why should I have to dob in my clients? I think a few people have asked that today.
Yeah, look, I think the tax system relies on people, complying in an honest and everyday fashion. And from time to time, we all come across clients who may not be prepared to do the right thing. And if you as an agent have given them the right advice and the right guidance, and they're still refusing to do the right thing, then we believe, and government believes, that it's important for the integrity of the system that they're made aware of that. Now, I will emphasise that this is in relation to significant or material issues. It's not about trivial things. And I think in most people's day-to-day practice, it'll be a rarity that they come across a significant or material false or misleading statement. But I'm sure when you do come across it, you'll recognise it.
Thank you, Peter. Just to sort of expand on that a little bit, I've had a lot of people asking what we mean by material or substantial. Could we delve into that a little bit further?
You know, I really think it's a concept that's pretty familiar in the accounting world, in particular in the auditing world. But material relates to the circumstances of the individuals concerned. So for a large public company, a material item might be in the millions of dollars. For an individual taxpayer, it could be in the small thousands of dollars if somebody's really persistently not prepared to do the right thing. When you come down to talking about the integrity of the tax system, a couple of $1,000s here and there might not impact the integrity of the tax system. But perhaps if you're aware of a client or a practitioner, another practitioner who's in the business of perhaps phoenixing companies from time to time, I think generally speaking, phoenixing is regarded as it's really poor behaviour. It's effectively criminal behaviour, and it happens at the expense of the system. So we need to know about those sort of things so we can take appropriate action. And when we publish our compliance and regulatory findings, other practitioners can see that this sort of behaviour just firstly is being dealt with, and secondly is just completely unacceptable.
Thanks, Peter. Jeanette and Michael, did you have anything you'd like to add there?
Sure, look, I might expand a little bit, Julie, if I could, on what Peter mentioned with that question about dobbing in. I think it's really important for us to all recognise, as Peter was saying, that you've got to go through a lot of steps and hurdles first before you even trigger that requirement to notify the ATO or in some cases the TPB. So we are talking about situations where statements are materially false and misleading. And, going to that question before, in what's material, we mentioned it's not something that's trivial or inconsequential. And it's something that a decision maker, for example, would take into account when they're considering an issue. Those things are material. But, once you have triggered, a material test when looking at false and misleading statements, you've got to establish things such as a failure to take reasonable care, recklessness, or intentional disregard. And so it's not something that you will be doing lightly, and I don't think, and hopefully it's not something you'll be doing often. And where you do find yourself in that position where you are required to notify the ATO, for example, it's not a particularly onerous task to do that. There's no expectation, you'll see this in our draft guidance, there's no expectation that you're providing detailed case information and evidence to the ATO or the TPB. It's about providing some general information that allows either organisation to make further inquiries if they think it's necessary.
Thanks, Jeanette. I've also had a few people asking about how this relates to the confidentiality obligation as well. Would you be able to speak to that, please?
Sure. Look, thanks, Julie. And I know there have been concerns raised around how this new obligation intersects with your obligation to maintain confidentiality of client information. And under Code Item 6 in the Tax Agent Services Act, you do have that obligation. But there is, I guess, an exception unless you're required by law or the law doesn't prevent that. So in this case, this new code determination, Section 15, what we're discussing now, does create a legal obligation to notify in certain circumstances, and therefore that will protect practitioners who have concerns about breaching the code.
Thanks, Jeanette. That's really clear. Thank you. The next question I have here is, what do I need to do? When do I need to withdraw my services to a client? Not sure who'd like to take that one.
Well, yeah, Julie, I'm happy to take that. So if you're an agent and you've got a client that you believe has made a false and misleading statement, or you've advised them that you may have inadvertently made a false and misleading statement on their behalf, if you've given that client reasonable time to to remediate the situation, i.e. to correct the false or misleading statement, and the client has either refused to do it or given you every indication that they're not going to do it, or if you believe that there is intentional disregard of the tax law or recklessness, then you've got an obligation to report to us or the ATO. And I think, for a lot of people in their day-to-day work, they're probably not going to come across material false and misleading statements. But it's been a feature of the tax law for a long time. And the sort of thing is, if you tell the commissioner in a return that you've made no income in a year, but you've made $100,000, that's a false or misleading statement. If you're making statements that you didn't sell a capital asset during the course of the year and incur a capital gain when you actually did for a significant amount of money, that's a false and misleading matter. And I think, trivial is if you accidentally claim an extra $300 in mileage, sort of thing, that. And I think people have got to think along those sort of lines.
Thanks, Peter. Michael, I might ask the next question of you. I've got one here asking, what do I need to tell the ATO if I'm notifying them about a client? I know Jeanette sort of touched on this, but if you could just expand on that a little bit more, that'd be great.
Yeah, thanks, Julie. And can I just add to Peter's comment about the withdrawal? There are some of those legal requirements I need to follow in terms of the code. There's also that practical requirement that all prudent advisors already consider, that practical requirement about, is this the right client in terms of my client base? Is this the right client in terms of the reputation of me and my firm? Is this the right client in terms of the ongoing roles I have in dealing with audit issues or investigation issues, my PII, my insurance issues, and also my professional obligations under the TASA, under the code, and sometimes in relation to my professional obligations as a member of a professional body too. That information that you need to provide to the ATO is not the correction of the statement. These obligations that come under the code, they build up, they're stepped because they're responsive to the degree of risk. And really the principle underlying this is that engagement with the client is inviting the client to make that correction themselves. And in the absence of the client doing that, you need to be able to provide information so the ATO, the TPB, as relevant, can make a decision. That information isn't the correction of the statement. The degree of detail will depend on the circumstances, but the tax practitioner making that disclosure will be able to piggyback off existing disclosure complaint mechanisms in the TPB, and the ATO is developing a similar kind of response. So people will be able to be guided through a kind of smart form process about what they'll need to disclose. Thanks, Julie.
Thank you for that. Okay.
Julie,
Sure, Peter, go.
Picking up on a couple of things that I'm seeing on the chat. And, one of them, there's a comment about a client who deliberately misstated their stock take one year and had claimed some specialised parts for, private vehicles, and that the agent became aware that the client had done those things. That's a classic example of where it might be a significant false and misleading statement. And the practitioner's obligations there are to talk to that client and say, well, look, you do understand that by, fudging your stock figures, you are making a false or misleading statement of the commissioner. It's a very serious matter, and we need to correct that. And then explain the consequences of the taxpayer not doing that. And that's where you get into this reporting piece. And as Michael's just finished saying, for a practitioner, there's a lot of work out there these days and a lot of good people you can work for. Do you want to put yourself at risk by working for people who want to just deliberately cheat?
Thank you, Peter. Just while we're on the topic of reporting a client, I've had Edward asking if you do need to report a client in a practical sense, should you be terminating the client before you report them to the ATO?
That's the order of the steps in our guidance, is that, if you get to that stage, the first thing you do is terminate your relationship with the client. And then if you can't get to the point where you think the client has remediated a false or misleading statement, then you should report.
Great, thank you. The next question I've got here is, does the obligation fall to me if it is my employee who has prepared the false or misleading statement?
Yeah, I think, Julie, that's a really good question. So it's the employer, i.e. the tax agent, who has the relationship with the client, who has the obligations here. So if your staff are making false or misleading statements in their work on your behalf, it's the agent themselves who has the responsibility. I think if we get to multi-practitioner firms, we're looking for the firm to be the reporting entity, and we're looking for the firms to have in place the right sort of systems and procedures that allow these sort of matters to be accelerated through the firm to the point where they do get reported.
Thank you. The next question, Jeanette, I might put to you, and this one is asking, what does it mean to know or ought reasonably to know? If you could just clarify that a little bit. Thank you.
Thanks, Julie. Yeah, this is a question we get very often. It doesn't appear just in this particular code obligation. You'll see it in other aspects of the TASA and other laws as well. At its simplest, when we talk about that's obviously having actual knowledge that a false or misleading statement has been made. That's pretty easy. In relation to whether you ought reasonably to know, this extends to what we call constructive knowledge. So where a person is taken to have knowledge. So we look at a reasonable person based upon what's in front of them, the facts and circumstances, their interactions. Would a reasonable practitioner in that situation ought to have known that a false or misleading statement had been made? So it does require a judgment call, Joy.
Thanks, Jeanette. Michael, I might ask you the next question, and this one is, how do I assess what is in the public interest?
Yeah, thanks, Julie. The public interest is one of those things that is variable, isn't it? And it relies on the expertise, the experience, and the professional judgment of members of the tax profession. I guess some of the guidance material that the APS board has provided gives a bit of a guide, because it picks up things like is the tax position of a particular taxpayer, of a particular practitioner, one that's supporting community confidence in the integrity of the tax system, supporting trust in the tax profession, and some of those factors that other people describe as a proxy of the public interest test. They sometimes describe the pub test or the headline on the front page of the paper test. So practitioners have good common sense, have good professional judgment, and will be able to rely on their existing professional association guides, like the APS guide, as well as their own knowledge of the circumstances in assessing the public interest.
Thanks, Michael. The next question here, I think we've addressed this in the webinar, but if we could just clarify once again, when do the obligations start and what is the TPB's approach to enforcing the new obligations?
Thanks, Julie. So the obligations start for the large firms, i.e. those with 100 or more employees. The commencement date is the 1st of January 2025. And for everybody else, the smaller firms, it's 1 July 2025. And sorry, what was the second part of the question?
Yeah, thanks.
So I think, one of the things I really want to stress to practitioners is that once these provisions are in place and applicable, we're not going to be running out and knocking on your door and trying to investigate whether you're complying with every one of these particular things. What happens in the way we do our work is we get we get referrals from the ATO and complaints from the public about poor behaviour of some tax agents. Now, when we get those complaints or referrals, we go through a process that we call triaging. We'll have a look at the seriousness of them, have a look at the evidence, and have a look at the general circumstances. If we think there's a real matter that we need to follow through on, we might go through an investigation. Now, the investigation will concentrate on, really the poor behaviour. Has the agent been stealing money from clients, or have they been promoting tax schemes, or have they been just incompetent in their own work in terms of claiming deductions or missing income? And they're the matters that really are the substance of poor behaviour. But once we've assessed the behaviour, we can also look at how they conduct their practice. So if you're not competent, you're not keeping up your PI insurance, you're not doing your CPE, if you haven't got a quality management system in place, and you haven't disclosed perhaps deliberate false and misleading statements, it grows that bigger picture of poor behaviour. And that leads to the point where, for the really poorly behaved or egregiously behaved practitioners, they'll get serious sanctions. If it's a minor issue that you've had a complaint or a referral about, our TPB investigations team will probably deal with that with you directly with a phone call and perhaps a follow-up letter and nothing more. So, that's how we enforce these things. So it's not as if on the 1st of January we'll be sending inspectors out to look at your quality management system.
Thanks, Peter. Just while we're on the topic, I guess, of compliance, I noticed there's quite a lot of questions coming in today asking about why are practitioners being punished for other people doing the wrong thing, and there's been some references there to PwC. Obviously, people are concerned that they're, having these extra requirements, but it's not through any of the, their own fault. So if you could just talk to that for a bit, that'd be great.
Sure, I'm happy to talk to that, Julie. And I think one of the things that needs to be said is that I don't believe this is in any way, shape, or form a punishment. And I know that people can feel that they're being put in the bus together with people who have behaved poorly. We know at the TPB that the vast majority of you either do the right thing professionally and naturally, or at least you're trying to do the right thing. Now, these additional code items, I think, give a bit of extra specificity to what is expected of practitioners, and most of you are meeting these requirements already. The other thing I would say is that these requirements largely mirror the professional standards that are promulgated by the Accounting Professional and Ethical Standards Board in their standards. Now, those standards apply already to anybody who's a member of the major professional associations who are signatories to those standards. What we're doing here through this code determination is spreading those standards across the whole of the profession so that everybody's on a level playing field. Now, I want to make it really clear that we understand the difference between a large firm and a small firm. And I've seen some of the comments on the chat, and I appreciate that for a small practitioner, this might seem a bit over the top. But what we're asking you to do is, implement reasonable systems in your own firm to make sure that your behaviour is ethical, that it's competent, and that you're aware of the behaviour of your own clients. We're clearly not asking you to be an ATO auditor of your clients, but we do know there are circumstances where from time to time an agent might really have a clear understanding that their clients aren't prepared to do the right thing from time to time. Or that it might be obvious to them that, say their client said, oh, look, I haven't made a capital gain this year, but that last year they had a significant property asset or a significant share portfolio that's not there this time. That, it's obvious. You can ask those questions. If you're not getting a straight answer from your client, it's pretty obvious. So, we're just asking practitioners, small practitioners, to use their professional judgment and common sense in relation to these matters. And, I think it does, if you can take that sort of opposite parallel and say, have a look through these and see how I can use these to help protect my own business, my own livelihood, and my good clients. Put a positive spin on it.
Thanks, Peter. Next question is, how do I notify the TPB or the ATO if my client hasn't corrected a statement?
That's a great one for Jeanette, I reckon.
Go, Jeanette.
Thanks, Peter. Look, I'll start off with TPB in the first instance, and I will say that in relation to notification for your clients, it's probably unlikely that you will be notifying to the TPB. But should that arise, you can use the online form we have on our website to make that notification. If unfortunately that notification relates to yourself as a practitioner, you can log into my profile to make that notification to us as well. In terms of the ATO, we understand that they're working through a process, in time for 1 January or 1 July 2025. But I don't know the details of that at this point, but they are working through that to make that system workable for practitioners.
Thanks, Jeanette. Just while we're on that topic of notifying the ATO, are there any exceptions to the obligation to notify them?
Yeah, there are, and there's some really important exceptions there that I think, we should all be very aware of. I know there was a lot of concern about how this new obligation will apply and how it will impact on you. But where we are in a situation where you do need to notify the ATO or the TPB, there are exceptions. Where you have concerns around safety for yourself, your family, or to your staff and employees, or where you are prevented by another law from actually disclosing that, then you need not disclose. That obligation also, or that exception, sorry, also applies where you might have to take further action, and that's something that Peter spoke about in the earlier slides. In addition to having to notify the ATO or the TPB in certain circumstances, you may need to take some further steps where it's in the public interest to do so. And in those cases, those same issues around safety also provide you with an exception as well.
Thank you. I guess this sort of relates as well, Jeanette, but someone's asking here that they work for a tax agent company. So what are their obligations to notify the ATO?
Sure. Well, without sort of knowing the specifics of that engagement, I can say that the obligation really sits with the entity that is actually the one providing the tax services. So in that case, it appears that, we have an employee, for example, who are providing services on behalf of their entity, the company. So the obligation sits with the company, but the company must ensure that it has policies and processes and procedures in place that allow employees to properly escalate matters so they can be escalated for resolution, whether that be notification, withdrawal, etc.
Great, thank you. The next question I've got here is around the new breach reporting obligations. And the question is, how does this new obligation operate with the new breach reporting obligations?
On for me, Julie? Or
I think, yeah. Michael, would you like to go?
I'll go and then Jeanette will correct me, Julie. How about we do it that way? I think that breach reporting obligations that are a separate part of the law have similar kind of concepts. They talk about a significant breach, and that lines up with what Peter described as the materiality factor associated with these requirements. So we're updating our guidance in relation to significant breach reporting so that practitioners have got a practical way of comparing and contrasting those requirements. I think a couple of things about that, Julie, is that practitioners and the public engage with the ATO in all sorts of ways, all the time. And a lot of people make anonymous information reports. Some of the notifications in relation to significant breach reports and under the new code are about the practitioner themselves. So obviously they can't be made anonymously. And in order for the practitioner to confirm their compliance either with significant breach reports or this notification requirement, they'll need to be able to show the records that they've filed. So there will be a simple process, an online process, so that people can confirm their compliance with breach reports or notification under Section 15. Thanks,
Thank
Julie.
you. Jeanette, did you have anything to add there?
No, Michael, spot on. Thank you.
Thank you. Well done. So I've had quite a few people asking about whether we could provide an example of what we mean by something material. Would you like to take that, Jeanette,
Look,
or Peter? Yep.
I'll have a go, and then Jeanette can have a go as well. You know, material means, something that matters to either the tax system or the client. Now, it's going to be different for different levels, as I said earlier. Something that's material to a large corporate will not necessarily be material to a small taxpayer. But I think if you sit there and say, if a tax agent made a mistake for $150 in an individual tax return, that's going to be immaterial to most people and to the tax system. We often see circumstances where agents for their clients make erroneous claims for work-related expenses in the several thousands of dollars. So if you're overclaiming work-related expenses by $5,000 for an individual, that's clearly material. Okay? A couple of $100 by mistake or an adding error or something like that, not an issue. Once you get into things like work-related expenses for, several thousands of dollars, it's clearly material. If you're talking about, you sold $1,000 worth of shares and forgot to put them in, and there was a $200 capital gain, not likely to be material. If you sold $150,000 worth of shares for an $80,000 gain, clearly material. And I think people have just got to be prepared to use a bit of common sense and judgment, and relate the question of materiality to the facts and circumstances of the situation. I think that's as good as I can give.
Thank you. Did you want to add, Jeanette, or are you happy with that?
Look, I might just add a situation I spoke to, I think it was last week or perhaps the week before. Obviously, dollar value is something that that is a consideration. But we also look at repeated instances. So you might have a small amount, but where a practitioner, for example, is making repeated, there's a pattern of making those false and misleading statements, even though they may be relatively small in dollar value. That might also amount to a material situation as well. So there's just a few different aspects to look at this from.
Thank you. The next question here I've got is about protection for practitioners. And I've had quite a few people ask actually, what kind of protections are in place for a practitioner if they dob in another practitioner? Will they be protected?
I can start the answer there, Julie, if you like. The information that's given to us is always protected. With the information that goes to government agencies like the TPB, the ATO, is subject to strict rules around confidentiality and secrecy. Disclosure of that information is subject to the law. And there are some circumstances where engagements with the ATO and the TPB can be additionally supported. For example, if somebody is an eligible whistleblower, there are additional protections for people, including tax practitioners, who can be protected against any adverse action against them. So yes, in all the information we have is kept confidential. And if practitioners have particular concerns about issues, then by all means, we ask you to speak up and let us know, and we'll manage those issues with you.
Thank you. Did you have anything to add, Peter or Jeanette, for that?
No, that's fine. Thank you, Julie.
Yep. Okay. Okay. Next question I've got here is asking about the time frames. We've talked about reasonable period and that sort of thing today. Could we explain what we mean by that?
Sorry, say again?
Sorry, what we mean by a reasonable time to disclose something.
Look, I think, normal turnaround times within 30 days, we think would always be a reasonable time from the time you become aware that there's a need to do something. And I think that, probably one of the most important things is as soon as you become aware of something, if you do nothing else, at least make a note of it and give yourself a reminder to do something about it. If you've made a note and you've reported something to us within that 30-day period, I think we'd be happy with that. It's hard to, if it goes past the 30-day period, you're sort of sitting there saying, well, why did this person not disclose it? Were they trying to hide it? So, but make a file note and give yourself a reminder to get it done, and get it done within 30 days. And I don't think there'll be a problem.
Thank you. Next, I just wanted to ask, have the accounting bodies been consulted on these new obligations?
Yeah, so, Julie, thanks for that. We've been through several stages of consultation. So in the first instance, Government and Treasury consulted with the professional bodies about how the law was drafted, and then the law was finalised, and it's now been handed over to us at the TPB to implement and to issue our guidance. So subject to the code determination being finalised, we've conducted significant consultation with the professional bodies. We've conducted two large roundtable conferences like this one where we've had their input. They've also had an opportunity to provide written input into the draft guidance, all of which has been incorporated into the draft guidance that was released yesterday. And now what we're saying is that it's still in draft, but it's had the preliminary eye over it from the professional bodies, consultation directly with us, and now we're opening it up for 4 weeks of public consultation, which gives everybody an opportunity to give us their feedback in relation to the guidance. So what we're hoping to achieve is that our guidance is as clear and user-friendly, and that the examples are as realistic and appropriate and useful as possible. So any commentary that people have in relation to the usability and practicality of the guidance will be warmly received.
Thank you. I've got a little bit of an example here in the next question, and it's someone saying that they have a client at the moment, a current client, who's not paid or lodged super guarantee amounts for the last 18 months, despite the tax practitioner's strenuous efforts to, let them know that they must be complying. In this situation, would that be something that they would need to let the ATO know about?
Look, yes. I'd like to understand the surrounding circumstances better, but generally speaking, everybody takes super guarantee pretty seriously because it's the employee's money. Once the employee's done the work and paid their wages, they're entitled to those super contributions. So not lodging super guarantee, not paying super guarantee contributions and not lodging, we would regard as a serious and material matter.
Thanks, Peter. I've had a few people just curious as to how the TPB are going to actually handle this additional workload.
Before we do go on to that, can I just say,
yeah.
In relation to those super guarantee type examples, it's genuinely open to the tax agent and their client to talk to the ATO and work out payment arrangements for things. Because what we're promoting is a proper relationship with the ATO. Everybody understands that from time to time there are genuine problems, and you should be talking to the ATO about those and making proper arrangements, not just sticking heads in the sand, so to speak. Anyway, sorry, back to your next question.
No, that's okay. Michael, would you like to take that one? It was just in relation to how the TPB will handle the additional workload.
Yeah, thanks, Julie. There's workload around any reform, of course, and some parts of that are understanding the law and helping practitioners to understand the law. So the best part of our investment is working with you so that the guidance is right and then the system works efficiently to uphold standards and support integrity. There will be some investment that we need to make in our system so that we can capture this data and our data analytical tools. And obviously, in the worst cases, that after this regime is settled, then we'll need to follow up those high-risk cases where there really is a material interest. Can I just pick up that line too, Julie, because one of the questions in the chat just raised the point about the risk impacts of small fraud. And whilst there could be small fraudulent matters, those things pick up Jeanette's points about the cumulative impact. And the cumulative impact is not just a monetary aspect of materiality, it's the impact on trust in the system or trust in the tax system as well as the profession. And so those things are important, particularly in the context of really serious misconduct. And just picking up Peter's point, those amounts like super guarantee, GST, PAYG withholding, they're amounts that businesses hold on behalf of other people and then pay to the tax office. And so that sort of accentuates the risk of non-compliance, but it also provides that great opportunity for tax practitioners. A lot of you have heard the call from the ATO that the debt book is large and exceeding $50 billion on their side. And the call of all people with outstanding debts is to engage with the ATO first, seek a payment plan, and reach out if there are very necessitous circumstances, because the ATO will be able to support practitioners and their clients in getting back on track. Thanks, Julie.
Great. Thanks, Michael. I've probably got time for probably 2 more questions, and then I might go to each of you just to give your final thoughts for the day. So this question here is coming from Vanessa, and she's just asking, if a single report doesn't lead to an investigation, is that report kept on file for the TPB to see a pattern of behaviour, and will that be considered further down the track? Jeanette, I might put that one to you.
Thanks, Julie. Yeah, we always take information, complaints, referrals, etc. on as intel. But I think I probably just want to clarify that today's session is sort of focusing on Section 15, the false or misleading statements, and that's kind of bleeding into the breach reporting aspects of things. And I don't want those two things to be confused. While they are sometimes related, they are two separate things entirely. But we always welcome intel, and we do look at that for any sort of patterns, trends, or drivers.
Awesome. Thanks, Jeanette. And then the final question is around the implementation of the new obligations. And we've talked about today how it depends on the size of your practice as to the start date. But we've had a few people asking what that actually means in terms of counting how many people you have in your practice. Is it only tax agents that you're counting, or is it other staff? How do they go about making that determination?
Julie, it's crystal clear in the law that it's 100 employees. It doesn't matter whether they're agents or admin staff. You could have a mixed business that was financial planning and tax agency, or a firm that was tax agency, financial advisory, and some audit. It's just the total number of employees in the firm. Thanks
for clarifying that, Peter. So I might go to you first, Peter, if you wanted to give your final thoughts and wrap up.
Yeah, look, just finally, Julia, I've been watching really closely the comments on the chat, and I know there really is a range of views on there. I just want to really reassure people that the TPB's role in this is that we don't make the law, but the law's been made, it's been consulted on, and now it's our job to be the regulator of the profession and using the law that we've been given. We're doing our best to move quickly to provide guidance to people that's practical. And I just want to re-emphasise again that we really do understand the difference between large and small. So our expectations in terms of sophistication of response is much higher at the top end of town and much more pragmatic at the bottom end of town. So, for a sole practitioner, when it comes to a quality management system, we don't need to see endless pages and manuals. What we need to see is that they've got an appropriate way of dealing with the risks that are involved in their practice, protecting people's information, making sure that there's a business continuity plan in case they're incapacitated, and making sure that there's appropriate security over information and client money. Things like that, they're not that difficult. So, if you've got any issues, get in touch with the TPB, and please give us your constructive feedback on the draft guidance.
Great, thank you for that. Michael, would you like to add your final comments, please?
Yeah, thanks, Julie, and thanks everyone for tuning in today. I guess the key message is have a look at the guidance, and we welcome your feedback. We want to make it as practical and helpful as possible, particularly if there are case studies or particular examples that will assist you. And the other side of that is that there is a lot of material that we've issued, but the principles that underpin the new code obligations are very consistent with the existing ethical and legal obligations in our law and from various accounting bodies. They're very common sense based, and the responses required are very risk based. So the higher the risk, the more that needs to be done. So there's a very practical element in the guidance, and there'll be a very practical application of that by the TPB. Over to you, Jeanette.
Thanks, Michael. Just very quickly then, just so we're out of time, Julie. Probably just 2 quick comments from me. Thank you to everyone that's putting questions in the Q&A. I think we're sort of at the 200 mark. We'll take all of that feedback and look at it when we look at finalising and revising our guidance. And my last point is, I know there's been a lot of conversation about, you know, recognising the small practitioner, the sole practitioner, and these obligations, you know, could be onerous for them. There are 8 obligations, and we've got webinars for each one of those, and you'll see there it's a bit more pronounced. We are looking at different requirements when it comes to practice size, so hopefully you'll get some reassurance from that. Things such as quality management systems is probably a good example around where we do have varying requirements based upon practitioner size.
Thank you, Jeanette. Just to wrap up, I'll provide a little bit of information on how to stay in touch. So obviously you can jump on our website at tpb.gov.au. You can also follow us on LinkedIn, Facebook and X, and you'll get the most up-to-date information there. We also have TPB e-news, which goes out each month, which we encourage you to subscribe to, and you can do that on our website as well. Also, encourage you to subscribe to our YouTube channel. We are recording all of our webinars, and they will be available as soon as we can put them up. And the great thing about that is that you can still claim your continuing professional education for viewing those videos as well. Just want to say a big thank you to Peter, to Michael and Jeanette for all your insights today. And also thanks to Fiona and to Nadia for helping out with the questions today. And as Jeanette said, we will take all of those questions on board, and we'll develop some FAQs as well to assist everyone with the answers to those. And we do have another webinar scheduled for next week as well, the next one in the series. So if you'd like to go onto our website at tpb.gov.au/webinars, you can register for that one there. And then we've got 2 more that we'll be adding to the website very soon as well. And then finally, just to finish up, we will be launching an exit survey, and we really appreciate it if you can take the time to complete it. Very quick, only takes a moment of your time, but adds some valuable feedback for us and ways that we can improve on our sessions to assist you as best we can. So thank you everyone for taking the time to join us today, and we do hope that you enjoy the rest of your day. Thanks again.
Thanks, everybody.